long-term assets. This topic will include and will tackle certain questions such as the differentiation between tangible and intangible assets. We will talk about depreciation and amortization. And what else? Let me see. Yeah, so we're going to also talk about capitalization and expenditure and investments as well. So this is going to be quite an interesting topic to go through. Now, we already are familiar with assets. Assets can be current and long-term. The current assets are, well, we know that it can be cash, yeah, accounts receivable. The long terms are those that are serving for more than 1 year, so computers and buildings. And also the long-term assets can be tangible and intangible, yeah. So this is also two types of the assets that you need to be able to differentiate with from. Then we have, well, tangible assets in general have very have the essence, yeah. So they have this physical substance. They are the computers, the things that we use physically, yeah. So they have this physical substance, and we already are familiar with many examples of those. Whereas the tangible assets can be both short-term and long-term. Yeah, so the short-term will be inventories, and long-term will be, for example, operational computers, meaning the computers that are not sold by Apple, but those that are used in the company to make those sales, to make the company work, and so on. Yeah, so from the inventory, that could be, for example, iPads, for example. Yeah, the ones that they use for sale. Yeah, technically speaking, if we look at it, the iPad itself is actually a long-term asset. However, for Apple company, for Apple Corporation, if it is viewed as an inventory, it's going to be a short-term. Yeah, the same goes for Mac computers, MacBooks. These are all inventory and therefore short-term assets. So what exactly qualifies as long-term? Yeah, I already mentioned it quite a bit. So they have a useful life more than 1 year. They have no plan. The company has no plan to sell this item in the near future. And these could be, you know, the long-term assets. And as you know, for example, here I mentioned operational computers that the company uses to make their business run. So the ones that they use in their offices. This one can also be sold, but they don't have the plan to sell it. It cannot be identified as an inventory. It cannot be identified as a short-term asset. Now, long-term assets, tangible assets are also called fixed assets. They usually get listed under the category called property, plant, and equipment, or PPE, how I will be calling it quite often, or also known as fixed assets as well. So let's take a look at the Apple Corporation's annual report, 10K, and and continue with our slides. Okay, so intangible assets, however, on the other hand, they are less we are less familiar with them, with those. We haven't talked about them that much. Intangible assets, they don't have any physical, yeah, no physical substance whatsoever. So the examples are patents, copyrights, franchises, licenses, goodwill, and trademarks. Now, I'm pretty sure you're all familiar with these words. You've somehow heard of them. You have heard somewhere in the news about patents, copyrights, and so on, and franchises. But let's tackle them one by one and see what they exactly mean. Very briefly, they have different useful lives. For example, patents have only 20 years of lifetime. Yeah, only within for 20 years you can use a patent. Trademarks, on the other hand, they are renewable every 10 years. Copyrights, 7 years beyond death, 70, I'm sorry, years beyond the death of the creator. So for example, if you talk about so one of the 20th century authors, let it be Walt Disney. Although I did kind of choose the wrong example in this case, because they did have some legal case that was an exception. So well, let's stick with the Walt Disney. Yeah, so Walt Disney created his Mickey Mouse and so on. Yeah, so the copyright belonged to him all of his life, plus for 70 years after his death, so his family members could also use the benefits of this copyright. And after 70 years, it usually turns into the public domain, and it is already public property. Now, goodwill, on the other hand, isn't indefinite. It has no term whatsoever. It has no useful life whatsoever. Now, intangible assets have sort of value that is very hard to pinpoint, so it's very subjective. Yeah, it has a very subjective value. Usually, the value of the intangible assets is not shown on the balance sheet. Yeah, it's not shown on the balance sheet until there is an event that indicates value objectively. So if you buy an patent from someone else, from another company, from another inventor, then you will record it. You will be able to record it in your balance sheet because you will have a purchase price. The same goes for a trademark. If you buy another company as a whole, you become the proprietor of that trademark and that business, then you will be able to pinpoint that price and then show it in your balance sheet. Yeah, so you're waiting for that purchase process. Now, if you ask about the patents that are invented within the company, or any intellectual property or any intangible asset developed within the company internally, let's say an Apple company, it develops a lot of its intellectual property internally, the cost of that development will be recorded as expenses on our income statement. Yeah. So this is one of the things that you should basically understand and be sure to be able to answer this question. If I ask you how to record the intangible assets internally or externally developed, you should be able to answer this question. Now, also let's look at some of the cases or onto the Apple Corporation's annual report and see what it looks like there. Intangible assets, specifically, let's go one by one. Patent in this case is an intellectual property. Yeah, it's an intellectual property or contract property. Contract that provides a company exclusive right to produce and sell a unique product. So patents usually belong to those who are inventors. So for example, I could have invented some kind of device that is used in computers or in other technologies. I would patent it, and then to be able to use my patented technology, the company would pay me a specific royalty and so on. Yeah. So for example, you can check out the Google Patents platform. We'll probably do it together and see what they have there, for example, for Google itself. Trademark is another type of intellectual property. It's an exclusive right to the name, the term, or the symbol that it uses to identify itself or its product. So for example, Nike has its name as a trademark, and you can see there is this R, which means that it has been officially registered. There is a legal claim to it, and this is what it looks like as a logo of the company. It's also a trademark, so it's basically is both the title, meaning that you on the trademark, on the logo, you can see the name and the specific symbol that identifies us as what is it, you know, the trademark of Nike company. So if I will increase the size of this one, yeah, so let's look at the closely at this one, and it's very blurry, so let's skip that explanation for now. But just for now, just remember that the logo of the company can also be a trademark, is the trademark. Yeah. The copyright, on the other hand, provides the exclusive right to reproduce or sell artistic or literary or musical compositions. Yeah, so every composer, especially in modern world, so let's use those that you're more familiar with. For example, there's Sia, there's Rihanna. These authors, they all you know, have copyrighted music. They have copyrighted products, and you can check them in the sort of, what is it called, United States, if I'm not mistaken, copyright I can't remember the name, but whatever, you can Google it. Basically, you can find the copyright information and even the number of the copyright for many artists and compositions as well. Now, goodwill is one of the most complicated intangible assets to explain because the goodwill itself is by itself, so it's very hard to explain the concept of the goodwill. Yeah, but let's go with the textbook for now. Yeah, so goodwill is the value of a certain favorable factors that the business possesses that it allows to create a greater rate of return on profit. So these factors can be superior management, yeah, skilled workforce, the quality of products or services, the geographic location, reputation of the company, and these factors is very hard to evaluate. It's very hard to put a value to it. So internally developed goodwill is, again, just like I said earlier, intangible assets internally developed. They are not seen anywhere on the balance sheet. We are only recording them as expenses. We record them as expenses in our income statement. Yeah. So when we're developing all of those intangible assets. Now, goodwill on Apple balance sheet, for example, if we see it there, it will be the purchased price or the value of another business for a higher price than its book value of its net assets. For example, let's say that Apple or any other company have purchased another company. Yeah, so they have bought, purchased. Let's say, okay, this is kind of a seems like a dystopian or apocalyptic scenario, but let's say the Mega, which is Facebook company, yeah, the current name Mega, has been purchased by Apple. In this case, the goodwill, so for example, it is listed as let's say $1 trillion. I don't think it will be any less trillion dollars. Okay, let me put it clearly. $1 trillion is set as a price for sale. The book value of the net assets of Mega is 1 trillion. Let's imagine, yeah. So if Apple, and there are many other companies that would be interested to buy this company, again, like I said, I don't see it happening, but let's just imagine. And Apple wins over the bid and purchases this Mega company for, let's say, $2 trillion. So the difference between the book value, and this is book value of Mega, and the purchase price will become, yeah, trillion, this 1 trillion. So 2 minus 1 trillion is going to be the difference. Yeah, it has to be recorded somewhere. So when it will be recorded as the goodwill on Apple's balance sheet. Apple balance sheet, yeah, so it's going to be recorded like this. I hope this is very easy to understand. So let's I know I went through the explanation of intangible assets relatively quick, but we have covered them before in previous weeks as well. So I hope you understand this part very easily. This is not that hard. And let's move on to the practice of the tangible or intangible assets. So the question is just to look at these terms, look at these assets and identify which is tangible and which is intangible assets. So I'll just use the color coding. For tangible, I'll use purple, and for intangible, I'll just use red one. Yeah, so let's look at it. So tangible assets are, yeah, we're looking at long-term assets. Yeah, oh, sorry. Long-term assets. I don't know how to do it. I don't think this color is good, but long-term assets. Yeah, long-term tangible or intangible assets. So tangible assets, cash, it is, well, tangible. However, it's a current asset, not long-term asset. Patent, that is an intangible asset. Yeah, this is the first one. This is an intangible asset. Accounts receivable are current assets. Land, on the other hand, is long-term tangible assets. So I will circle it. Software is an intangible asset. Yeah, so it's an intellectual property. So it's a software going to be an intangible asset. Inventory, short-term or current assets are not receivable as well. It's a tangible. It can be both short-term and long-term, but let's just stick with this current level of it. Machinery is machinery is a tangible asset. Equipment as well is a tangible asset. Moving on to, I think, next, marketable securities. No owner's capital. Copyright as an intangible asset. Building Next one is long-term and tangible asset. Yeah,